Hello, everybody, and happy dot day. We had a cryptic tweet from Saylor today. Green dots beget orange dots. And so that probably means he's back to acquiring mostly orange dots. But I want to take this discussion to green dots and how green dots actually allow Michael Saylor to acquire more orange dots. Beget, right? Bring about, to give rise to orange dots, to bring into existence something new. And, that could be related, of course, to the bank tour that is had in New York. Maybe that cash will be used as a buffer of some kind for that new tool. Tough to know what's going to happen, but we know that the cash reserves has changed a few things for MSTR. That cash reserve exists for a few reasons. I'll get into that in a second. First of all, let me just say that our sort of inability to predict what is announced week after week, like I'm tempted to say tomorrow he's going to announce another $1 billion buy. That's what I'm tempted to say, because he's done it twice in a row, right? A billion. So the third week with $1 billion, finishing the end of the year strong, that would be logical. But if I can predict every time what he does, that's not very good for MSTR's volatility. And MSTR's volatility is dependent, of course, on Bitcoin's volatility, but it is also dependent on the inability of the market to predict what it's going to do and on the uncertainty surrounding the stock. And you have many people who own MSTR, hedge funds, ETFs, who own MSTR solely for the reason of selling covered calls, selling puts, towards MSTR. And so there's a large amount of demand for the MSTR stock. That demand exists because people want to write derivatives on MSTR. And so MSTR serves as a tool on which to write derivatives. And so you have a derivative on MSTR, and that explains a lot of the volume, especially on Fridays, right, when options get exercised. And if you look, the volume, for example, December 19, so that was this last Friday, the volume of strategy was actually higher than Walmart. Walmart, it was much bigger in the 2010s and in the 2000s, but Walmart is still one of America's largest companies. It is America's largest employer. MSTR has more volume. There is more interest in MSTR than there is interest in Walmart, which is crazy to think. And then you have things like SMCI who say, well, MSTR is not a real company, they're not an operating company, yet they have more volume than Walmart. And so anyways, the volatility is the vitality, the inability to predict is good for MNAV. You want to be able to not be able to predict it. And, you can't, if you want to ride the jet, if you want to ride the rocket, you have to expect to pull the G's. You have to expect these wild swings in the stock price. So that was the first caveat. I think it's good that we're not able to predict. Now, I'm still going to try to predict what's going on. So there's a few things that could be going on. How do green dots enable more orange dots? So green dots enable more orange dots because they represent the cash coverage needed to pay all of the preferred dividend. It's right now at 21 months. The more there is cash coverage, the more people have confidence in the durability of these dividends, in the safety of these dividends. The cash coverage gives more confidence in the preferred. The market is more confident in the preferred due to the cash coverage. And so as a result of that, there's a bid on the preferreds. The preferreds catch a bigger bid because there's cash backing up the upcoming dividend. Now, that being said, I believe that we could get a hybrid buy at some point where he buys Bitcoin, but also rounds up the green dots to 24 months, to an even 24 months. He's got 21 months. I believe at some point he will round that up to 2 years, makes for a good narrative. The green dots improve the solvability of the preferreds in the eyes of our credit rating agencies. It's important to realize that just like FASB last year, the credit agencies still use a value of big old zero in their models for Bitcoin, which is why they rated the instrument as junk, because the credit agencies don't consider Bitcoin, they don't see Bitcoin, right? They don't see that, right? They appreciate things like low credit scores and subprime mortgages, like they count that, but they don't count Bitcoin, right? Because Bitcoin doesn't exist. We all know this. It's fake to the credit agencies. So they have a bias against Bitcoin. That's going to take a lot of years to change. That's why they rated junk rating. And Saylor hopes to get out of this junk rating. How do you get out of this junk rating? Well, for example, by having 24 months worth of cash to back those dividends. And we know, of course, these agencies are very short term. They might rate the instrument much better if they show 24 months of cash. Better sentiment, better potentially credit rating. That cash on the balance sheet could lead Stretch to trade back at 100. And, I've said before, eventually I wouldn't be surprised to see Stretch raise $1 billion a week once we get it back above 100. Of course, that may not happen during bear markets. The volatility of Stretch has been stripped down to 3 to 2% volatility. In bull markets, could we get a 0% vol on Stretch? Could we get Stretch trading between 100 and 100.01 in bull markets? I believe so. But that could be only 6 months out of the year. That's why he's working on a new banking product. And eventually, Stretch will get back to 100. Make no mistake, he will raise the yield. Come January 1st, he will raise that yield. New announcement, raises the yield by 25 basis points. We're still trading at 98. And that inevitably will lead to the cost of Stretch going up to $100, back to 100, to where he can ATM. That's point number one. Now, point number two, you have a lot of cash sitting on the balance sheet. So concretely, how can you use the cash sitting on the balance sheet to buy the Bitcoin? Well, there's two ways to do it. There's kind of a default way to do it. So, if you have 1.4 billion of cash, unless you have like 20 different banks that you use, it's very tough for companies to just park 1.4 billion of cash. You need to have a pretty developed banking partners. You need to have a very high count of banks to just keep that in bank deposits. So the more default way, of course, to save that cash is to have it in short-dated treasuries. 1 month treasuries, they pay 3.6%. You can see those treasuries dropped, like three quarters of a percent in a matter of 3 rate cuts. So those treasuries, unfortunately, they're going to yield less and less, especially as we get Mr. Dove at the Fed coming up, right, in May. Right, Mr. Dove. So treasuries, unfortunately, are paying less and less. Business models like Tether or USDC, unfortunately, they will be earning less money with these treasuries. And of course, in my view, as you know, I think this is heading back towards zero. I think this is all headed back towards zero because the government is bluffing. There is only one way out, and it is monetary printing. That is the way they'll get out of this hole. The interest rate cost way too much money for the government, $37 trillion of debt, and you have to pay 3%. Well, that's your biggest budget item. Most of your taxes go towards paying this, more than the military, for example. So anyways, that's okay right now at 3%, but it's not going to be okay long term. And so I think long term, if he has a cash reserve, I think he could use that cash reserve to write puts on Bitcoin. So I'm using the IBIT as a proxy, but you can do it on Bitcoin too. I'm using IBIT as a proxy. So let's assume he writes puts at 10% lower than the strike, right? So we're trading at 8 Bitcoin is at 88 right now. Let's assume he writes an $80,000 put. Translated to IBIT, that would be a $45 strike. And of course, we're trading at about $50 for IBIT right now. So 45, 50, that's exactly 10% less. And so you earn about $1. You earn about $1 1 month out. These are the puts that you would write for January 23. And so the price is about $1 for writing a put at 45 1 month out. And of course, the collateral is the $45. So $45, you earn $1 a month, right? $45 worth of collateral, you earn $1 a month. How does that translate to yearly yield, assuming the volatility remains the same? 12 divided by 45, that's about a 27% yield. And that yield, of course, is slightly lower than the volatility that you get on Bitcoin, which is a higher volatility. So of course, that lower yield means you're taking less risk because you have a strike 10% lower than what it currently is. And you get that yield, that 27% yield right now, with these, I guess, somewhat safe strike positions, especially with Bitcoin being in a bear market, being such a bear right now at 88. I consider this fairly safe. So you get about a 27% yearly yield just for committing to buy Bitcoin at 80K or at whatever 10% less the going price is, right? And you can see, I mean, this is the beauty of volatility and options. You can see how roughly the yield that you get roughly equals the volatility, right? The volatility of the asset over a one month period, roughly corresponds to the return on that asset on an annualized basis. And so, Bitcoin, what's Bitcoin telling you here? The implied vol of Bitcoin, I'm not showing the exact strike, but it's roughly like 45%, 40 to 45% is what the options imply. That Bitcoin could yield about 40% from where it's at right now in a year. And of course, that's a little higher than what Saylor is anticipating. Saylor has said multiple times between 29 and 30% for the next 20 years. But roughly in line, the volatility is roughly the return, right? That's why volatile assets are absolutely amazing as an investor, because the volatility roughly equals to the return. And so these are two concrete ways that he can earn more cash to buy Bitcoin. And I think writing puts is the better way to do it. We know Mara has done that on quite a bit of its bag, about a third of its bag. I know CleanSpark's doing it. I know a lot of miners have experience with puts. MetaPlanet, of course, doing it. So you can harness some of that volatility with cash, and that's pretty useful if you ask me. And the final solution, like I said, is use up that cash as a buffer. Like Saylor tweeted that on Friday, build. And of course you recognize it's New York City. It's New York City in the background, and he tweeted himself build. And he posted this after his bank tour, where he visited Morgan Stanley and JP Morgan. And in my What's Next video, I kind of explain what's next, which is, in my view, Saylor he's trying to develop a zero vol dollar, Bitcoin-based dollar. A zero volatility Bitcoin-based dollar that yields, say, 8% or 7%. And so he can only do that with a bank, right? Because you need a cash buffer, and these banks need to provide a cash buffer. And one way that you could create this Bitcoin-backed yielding dollar, like an actual true stable dollar, I don't want to call it a stable coin, but an actual true stable dollar trading on TradFi rails, yielding 8% or 7%. The way you can do that is by, perhaps paying the bank 2%, 3% part of the margin, right? Stretchy yields 10.75%. Give 2 to 3% to the banks for them to provide the buffer, or maybe provide less of a percentage gain to the bank, and maybe take some of your cash that you have on your balance sheet right there to provide some of a buffer for the instrument. And I do think that's the instrument that's next. So feel free to watch my video where MSTR, where Saylor explained exactly what's next. He's explained this very, very clearly. And is it going to be a USA bank or a UAE bank? He doesn't know yet. There's kind of a competition between the USA and the UAE to know who's going to develop that TradFi stable dollar yielding 8%, which he considers like the best product ever, like a checking account that is always worth $1 that yields at 8%. That's Saylor's next game plan. And so, anyways, can't wait to see what it comes up with that. Can't wait to see what the buy is tomorrow. This was not investment advice. This is not financial advice ever on this channel. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.